Section 1. GM's Big Bet on Robotaxis. A look back at the Cruise acquisition. Back in 2016, General Motors made a bold move, acquiring a self-driving startup called Cruise Automation for a cool $1 billion. This acquisition was not just another business deal, it was a strategic leap into the future of transportation. GM saw the potential in Cruise's cutting-edge technology and envisioned a world where autonomous vehicles would become the norm. This was a clear signal. GM was betting big on the future of robotaxis. The acquisition was a statement to the world that GM was not just an automotive giant, but a forward-thinking tech company ready to embrace the future. The goal was simple: dominate the autonomous ride-hailing market. GM envisioned a future where their fleet of self-driving cars would revolutionize urban transportation, making it safer, more efficient, and more accessible to everyone. With Cruise's technology and GM's manufacturing muscle, they seemed poised to become a leader in this exciting new frontier. The synergy between Cruise's innovative software and GM's robust production capabilities was expected to create a powerful force in the autonomous vehicle industry. The initial strategy was laser-focused on developing fully autonomous vehicles for ride-hailing services. This meant not just creating self-driving cars, but also building an entire ecosystem to support them, including advanced software, reliable hardware, and a seamless user experience. Imagine a fleet of driverless taxis roaming the streets, picking up and dropping off passengers with unparalleled efficiency. These vehicles would operate around the clock, reducing the need for personal car ownership and alleviating traffic congestion in busy urban areas. This vision promised to revolutionize transportation as we know it. The convenience of hailing a ride with just a few taps on a smartphone, combined with the safety and reliability of autonomous technology, was expected to transform the way people move around cities. Investors were excited and GM stock soared on the news. The market responded positively to GM's bold vision, and there was a palpable sense of optimism about the future of autonomous vehicles. However, as with any ambitious endeavor, the road to success was paved with unforeseen challenges and unexpected turns. Developing fully autonomous vehicles proved to be more complex than initially thought, with numerous technical, regulatory, and logistical hurdles to overcome. The robotaxi market proved to be far more complex and competitive than initially anticipated. Other tech giants and automotive companies were also racing to develop their own autonomous solutions, leading to a crowded and fiercely competitive market. Fast forward to today, and GM has made a significant strategic shift, signaling a move away from the robotaxi dream, at least for now. While the vision of a fully autonomous ride-hailing service remains compelling, GM has decided to refocus its efforts on other areas of innovation and growth within the automotive industry. Section 2. The Cruise Control Dilemma: Why GM slashed staff and shifted gears. In a move that shocked the industry, General Motors announced a 50% layoff of its Cruise workforce in February 2025. This decision was not just a minor adjustment, but a significant shift in the company's strategy, reflecting deeper issues within the autonomous vehicle sector. This drastic decision sent ripples through the autonomous vehicle sector and left investors scrambling for answers. The news was a stark reminder of the volatile nature of the tech-driven automotive industry, where fortunes can change overnight. What happened? Why the sudden change of heart? These questions echoed through boardrooms and investment firms alike, as stakeholders tried to make sense of the unexpected turn of events. The decision to slash Cruise's staff and pivot its focus stems from a confluence of factors. It wasn't a decision made lightly, but rather a strategic move influenced by multiple challenges and market realities. First and foremost, the path to profitability in the robotaxi market has proven to be much longer and more arduous than GM initially anticipated. The initial projections were optimistic, but the reality of developing a viable business model in this space has been sobering. Developing safe and reliable self-driving technology is incredibly complex and capital-intensive. The technological hurdles are significant, requiring extensive research, development, and testing to ensure safety and reliability. Secondly, the competitive landscape has intensified, with companies like Tesla, Waymo, and even Apple vying for a piece of the autonomous vehicle pie. Each of these companies brings its own strengths and innovations, making the market fiercely competitive. This crowded playing field has put immense pressure on Cruise to deliver results, and the timeline for achieving a return on investment has become increasingly uncertain. The financial stakes are high, and the pressure to perform has never been greater. Additionally, regulatory hurdles and public skepticism about the safety of autonomous vehicles have further complicated the path forward. Navigating these challenges requires not just technological innovation, but also strategic foresight and adaptability. In response to these challenges, GM has decided to refocus its efforts on areas where it sees more immediate potential for growth and profitability. This includes accelerating its electric vehicle initiatives and exploring new mobility solutions that can be brought to market more quickly. By shifting gears, GM aims to position itself as a leader in the evolving automotive landscape, leveraging its strengths and resources to drive innovation and growth. The road ahead may be uncertain, but GM is committed to navigating it with a clear vision and strategic focus. Section 3. Riding the Waves of Change, Navigating the Competitive Landscape of Robotaxis. The robotaxi market is a high-stakes race, with tech giants and automotive behemoths battling for supremacy. Each company is leveraging its unique strengths to carve out a piece of this lucrative market. When GM first acquired Cruise, the playing field was relatively open. The acquisition was seen as a bold move, positioning GM at the forefront of the autonomous vehicle revolution. However, the landscape has transformed dramatically in recent years. The rapid pace of technological advancements and the entry of new players have intensified the competition. Tesla, with its vast fleet of data-collecting vehicles and its aggressive approach to autonomous driving, has emerged as a formidable competitor. The company's ability to gather and analyze massive amounts of data gives it a significant edge in refining its self-driving algorithms. Waymo, backed by Google's technological prowess, has been steadily expanding its robotaxi services in select cities. Its focus on safety and reliability has earned it a strong reputation in the industry. Even Apple, a relative newcomer to the automotive world, has its sights set on disrupting the industry with its secretive self-driving car project. The company's expertise in hardware and software integration could potentially revolutionize the market. This intense competition has forced GM to reevaluate its position. The company has had to take a hard look at its strategy and resources to determine the best path forward. The company realized that achieving profitability in the robotaxi market would require even greater investment and a longer time horizon than initially projected. The financial projections indicated that the road to success would be more challenging and costly than anticipated. Faced with these realities, GM decided to pump the brakes on its aggressive robotaxi ambitions and explore alternative paths to monetizing its autonomous driving technology. The company began to consider partnerships, licensing agreements, and other innovative business models to leverage its technological advancements without bearing the full burden of market entry costs. This strategic pivot reflects GM's adaptability and commitment to finding sustainable ways to thrive in the ever-evolving landscape of autonomous vehicles. Section 4. Cruise's shrinking valuation, unpacking the financial fallout of GM's decision. The layoffs at Cruise and the strategic shift away from robotaxis have had a significant impact on the company's valuation. When GM acquired Cruise in 2016, it was a billion-dollar startup with sky-high expectations. However, the recent restructuring has led to a reassessment of Cruise's worth. While Cruise achieved a valuation of $30 billion in 2021, the recent developments have cast a shadow on its future prospects. The layoffs and the shift in focus have led some analysts to lower their valuations, with estimates ranging from $15 billion to $20 billion. This downsizing reflects the challenges facing the robotaxi market and the uncertainty surrounding Cruise's ability to achieve profitability in the near term. Investors are now cautiously optimistic, waiting to see how GM's new strategy for Cruise will play out in the coming years. Section 5, Safety First, Profits Later, Regulatory Roadblocks, and the Impact of the October 2023 Accident. The development and deployment of autonomous vehicles are not just about technological innovation. They're also about navigating a complex web of regulations and addressing public concerns about safety. The October 2023 accident involving a Cruise robotaxi in San Francisco brought these challenges to the forefront. While details of the accident are still under investigation, it highlighted the potential risks associated with self-driving technology. The incident led to increased scrutiny from regulators and raised questions about the safety of autonomous vehicles. The regulatory landscape for self-driving cars is still evolving, with different cities and countries adopting varying approaches. This patchwork of regulations creates uncertainty for companies like Cruise, making it difficult to deploy their technology at scale. Section 6. Steering toward a new horizon. GM's pivot to personal autonomous vehicles. With the robotaxi market proving to be more challenging than anticipated, GM is charting a new course for Cruise, shifting its focus to personal autonomous vehicles. This strategic pivot aims to leverage Cruise's self-driving technology in a more consumer-oriented market. Imagine a future where you can purchase a car capable of driving itself, freeing you from the daily grind of commuting. This is the vision GM is pursuing with its new focus on personal autonomous vehicles. The personal AV market offers several advantages over robotaxis. First, it taps into the existing consumer demand for personal vehicles, a market that GM knows well. Second, it avoids the regulatory hurdles and public acceptance challenges associated with deploying fleets of